1,549 crores, that is $196 million, an increase of 3% year-on-year and a decrease of 1% quarter-on-quarter. As a percentage to sales, our SG&A has been at 29.7%, which is lower by 90 basis points year-on-year, however higher by 90 basis points sequentially. The R&D spend for the quarter is rupees 433 crores, that is $55 million, and is at 8.3% of sales. We continue to drive productivity across our businesses while also making investments to strengthen pipeline and capability development in marketing, digitalization, and people, including for Horizon 2 businesses. The net finance income for the quarter is rupees 235 crores, that is $30 million, supported by gain on account of strengthening of ruble rates during the quarter. While we had forex-related benefit in finance income, which has been partially offset due to forex impact and costs impacting our gross margin and SG&A. The EBITDA for the quarter is rupees 1,779 crores, that is $325 million, and the EBITDA margin is 34.1%. Adjusted for the one-offs of settlement income, brand divestment, and those related to gross margin, we are within our normal range. Our profit before tax stood at rupees 1,466 crores, that is $185 million, which is a growth of 97% year-on-year and a growth of 490% quarter-on-quarter. Effective tax rate for the quarter has been at 19.0%, primarily on account of recognition of previously unrecognized deferred tax assets on operating tax losses pertaining to our Swiss entity. We expect our normal ETR to be in the range of 24 to 26%. Profit after tax for the quarter stood at rupees 1,188 crores, that is $150 million. Reported EPS for the quarter is rupees 71.40. Operating working capital increased by rupees 790 crores, which is $100 million, against that on March 31st, 2022. The increase was primarily driven by an increase in receivables in North America, which should normalize during next quarter. Our capital investment during the quarter stood at rupees 331 crores, which is $42 million. The free cash flow during this quarter was a net outflow of rupees 232 crores, which is $29 million after payment of rupees 509 crores for the acquisition of Sigmus brand in India and the injectable portfolio from Eaton Pharma in US. Consequently, we now have a net cash surplus of rupees 1,275 crores, that is $161 million as of June 30th, 2022. Foreign currency cash flow hedges in the form of derivatives for the US dollar are approximately $366 million, largely hedged around the range of rupees 77.6 to rupees 80.4 to the dollar, ruble 8155 million at the rate of rupees 0.9204 to the ruble, Australian dollar 3.2 million at the rate of rupees 55.8 to Australian dollar, and South African rand 95 million at the rate of rupees 4.82 to South African rand, maturing in the next 12 months. With this, I now request Erez to take you through the key business highlights.
Thank you, Parag. Good morning and good evening to everyone. Our performance of the current quarter reflects the strength of our diversified business model. We have been able to mitigate several challenges faced during the quarter by monetizing various opportunities that led to highest ever profit at an overall business level. Let me share with you some of the key highlights of the current quarter. 1. Settlement of impending litigation for G-Suboxone for $72 million, which further helps strengthening our balance sheet. Completion of US FDA inspection of our new sterile injectable manufacturing facility, referred as FTO11, leading to subsequent approval of the product from the site. This enables us to commission this plant and bring on stream of additional capacities and capability to grow our injectable business. 3. Acquisition of cardiovascular brand Sigmus in India and the injectable portfolio from Eaton Pharma in the United States. Award of abiraterone tender in China, which will be our second product through GPO model. We are progressing well on product pipeline across small molecule generics, biosimilar, and differentiated products/NCEs. There has been good momentum in the initiative pertaining to Horizon 2 business and sustainability goals laid out during our recently concluded Investor Day. All of this will enable us to continue to deliver on our long-term growth aspirations. Now let me take you through the key business highlights for the current quarter. Please note that all references to the numbers in these sections are in respective local currencies. Our North America generics business recorded sales of $230 million for the quarter, which is a decline of 2% year-over-year and 13% on a sequential basis. This was largely attributed to the incremental competition in a couple of our key products, Gisoproxone and Acosapam, during the quarter. The Q-on-Q decline was also driven by a high base for first-to-file launch, Vasopressin Injectable, with normalized volumes and pricing adjustments due to the impending entry of competition on day 181. Bearing these products, the price erosion for the base business has been within the normal trend seen over the last few quarters. In this quarter, we launched 7 new products, some of which should be ramped up in the coming quarters. We expect strong launch momentum to continue during the year. Similar to the last 3 years, we believe that we can continue to grow this business on the strength of new product launches, while there will be volatility on a quarter-to-quarter basis due to the fundamental nature of generic business model. We are preparing for a volume-limited launch of lenalidomide ANDA products in the United States during September 2022. The specific volume-limited amount of generic lenalidomide that we are permitted to sell between September 2022 and January 31st, 2026, when we are licensed to sell in unlimited quantities of generic lenalidomide, are confidential. Our Euro business recorded sales of 50 million euros this quarter, with a year-on-year growth of 12%. However, sequential quarter decline of 4%. During the quarter, we launched 9 products across various countries within Europe. We expect to continue to growth momentum in the rest of FY23. Our emerging markets business recorded sales of 903 crores rupees, with a year-on-year decline of 1% and a sequential quarter decline of 25%. The decline was due to higher base effect as we had COVID product sales in Q1FY22 and brand divestment income in Q4FY22. Further, the increase in stock holding seen in Russia during last quarter due to the conflict is now normalized. However, impacted the quarter growth. Within the emerging market segment, the Russia business declined by 14% on year-on-year basis and 60% on a quarter-to-quarter basis in constant currency due to the same reasons. During the quarter, we launched 25 new products across various countries of the emerging market. We believe that on annual basis we will be able to grow this business in line with the past trends, adjusted for the one-offs of COVID sales and brand divestment income in previous year. Our India business recorded sales of 1,334 crores rupees with a year-over-year growth of 26% and sequential growth of 38%. Adjusted for the brand divestment income in the current quarter and the COVID product sale during Q1FY22, we have grown in as a healthy double digits. During the quarter, we launched 5 new products in the Indian market. As per the IQVIA report of June 2022, our rank in value terms is at number 10. We continue to reshape our portfolio in India business with the focus of growing big brands, acquisition, and partnerships for focused therapy areas while divesting non-core brands. Our PCI business recorded sales of $91 million with a year-over-year decline of 10% and sequential decline of 8%. Adjusted for COVID product sales in Q1FY22, the business has grown over last year. We expect to see improvement in the sales during the balance of the year. We believe that there are several opportunities for growing our core business and building new avenue of growth. We are committed to our long-term strategy and are progressing well toward productivity improvement and making right investment choices to deliver a long-term sustainable growth in line with our strategy unveiled on the Investor Day. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1. First question is on the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, thanks. Parag, can you just quantify the impact of Forex across line items? There is a income in finance income, but you also mentioned there are certain impact in COGS, SG&A. So if you can just quantify the net impact.
Yeah, so Sayan, the movement of ruble and some of the other currencies has led to an adverse impact in the gross margin, which would be roughly around 150 basis points in that range. And in the finance income, there is the upside that has been recorded, and that's because of the accounting standards, the prescribed method. So overall, that's the kind of impact that our P&L has.
Okay. The second one on Russia, particularly, I just missed the constant currency growth. If you can just indicate in Russia, and also, are you able to take any more hedges in Russia, or the hedges that you had at the end of fourth quarter, you are just you are running with that at the moment, and since the hedge amount is large for this year, what is the kind of realization that you will have on currency, and anything you can guide going forward? How should we model for Russia in terms of the currency rate?
So, Sayan, yeah, let me answer. The first question is on the constant currency sales impact. So during the quarter, our Russian business declined by 14% year on year in constant currency. And as we had signaled in the last quarter, this includes the normalization of the inventory stocking up that we saw at the start of the conflict. Now, coming to the second point on Forex hedging, as you know, ruble has appreciated significantly from, it used to be at a rate of around 0.9 to 1 to rupee, and it is now ranging anywhere between 1.3 to 1.45. We believe this rate may not be sustainable in the long run, and currently the cost of hedging is extremely high, prohibitively high. So we are currently not hedging. What we are trying to do as a business is to reduce our working capital cycle, and we have had some success in that. So instead of hedging our exposure, we are reducing the cash conversion cycle to minimize the impact on our business.
Okay.
And Sayan, just for me, if you take this normalization of inventory, will continue to go in Russia.
Okay. So just one more question, if I can ask. On India, you mentioned adjusted for COVID, you had healthy double-digit growth. But if you adjust for the acquisition, can you share the growth number?
Both. So if you take both out, Sayan, which is the brand divestments we take out, and also the impact of COVID in the base, then we have grown at healthy double digits. If you look at the impact of acquisition, if you take that out, then our growth would be in single digits.
Okay. Thank you. I'll join back to you.
Yeah.
Thank you. The next question is from the line of Anubhav Agrawal from Credit Suisse. Please go ahead.
Question is on the US market. Just when you talk about price erosion, so you talked about a couple of products. Is there any element of shelf stock adjustment on vasopressin also in this quarter in the US sales?
Again, can you repeat?
So when you call out, so US sales are down 13% quarter-on-quarter. One is the price erosion or volume impact on Suboxone and Vascepa, which you called out. But on Vasopressin, just trying to understand, is there an element of shelf stock adjustment there? Like, for example, let's say $5-10 million, which is just artificially depressing the reported number. And when we start the next quarter, that number, we start at the higher base. That's what I want to clarify.
So, like I mentioned in my part, basically we see the normal adjustment that is related to day 181 situation, and that's what impacted us in this quarter.
Yeah, and on the SFA adjustment, there was no such major impact. No.
When you say FSA, what does that mean?
Shelf stock adjustment.
Okay. Yeah. So you're not saying that we happened to record higher sales of Vasopressin in March quarter and we were surprised with the price erosion. So there is no element. So net $230 million that we're reporting, let's say that becomes the opening base for the second quarter for us.
We are not guiding, but let's say we do not see any surprises the way that you described it.
Yeah, I think the important point, Anubhav, is that the price erosion that we have seen in this quarter in aggregate is in line with the trends that we have seen in the last few quarters. And we are not seeing any sign that it's worsening. So that's the point I would like to make here.
Okay. Second is in the Russian market. Now we've seen good amount of July as well. Has there been any element of us some market share gains, some visible signs of that happening, or is it business as usual? Can you give some qualitative what's happening in the Russian market?
In Russian market, Anubhav, we are seeing our operations are normal. Supply normally. The flow of money within Russia and from Russia into India is also normal. There are, certain companies have shifted their spend from above the line, which is mass media or TV, to below the line, which is trade discounting and so on. So there are some shifts in the way spends are made, which are happening in the market. But overall, we are finding that it is business as usual. As you know, in the area of medicines, we are very focused on making sure that patients get our medicines, and right now I'm happy to say that our operations are normal.
Sorry, just to add just a clarity on this. So what I meant was, for example, with ruble to INR, conversion is much easier than, let's say, ruble to euro or USD. So is that benefiting you guys, or in general the Indian companies to take a higher share in the Russian market? And have you seen any visible signs of that?
In terms of visibility for the reported quarters, we did not have impact as such. We do not see at that moment anyone that actually lives in Russia. All the pharmaceutical companies, to the best of our knowledge and our visibility, are working in Russia, are operating in Russia. Likely that long term it will change, but right now that's what we see. In terms of our business in Russia, it's favorable. People understand that we took a decision to continue to work in Russia, and indeed it's comfortable for us to work, and it probably it will help us in the future. But as we speak, I think business as usual is the right way to give it the best transparency of what we see on the ground.
Okay, thank you, guys.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. My question is on US business. So you have a sizable portfolio of injectable products in the US. So can you comment like how pricing erosion in this part of the portfolio stand against the pricing erosion in the broader portfolio, which mainly consists of oral solids? And also, in terms of some of the complex generic launches which we are anticipating in the future, what are your expectation on the pricing part? So that's my first question.
Thank you. So the behavior on the injectable business in terms of erosion is similar. So if the number of competitors are coming and facing a handful of customers, the price erosion is the same. And also the pattern of the procurement is the same. So we don't see, let's say, different behavior. The only, I think, big difference in terms of injectables in which you can work directly with the hospital as well as to work with the wholesalers. And of course, this is allowing you more flexibility as it's related to share and market growth. More and more, in our case, we will see more injectable coming naturally, as this is where the patent cliff is, and this is where many people will go. I'm not sure I captured the second part of the question. If you can repeat, please.
Yes. So we are working on various complex generic products. Many of those are injectables, and these products might come over next few years. So I was asking, in terms of pricing, how do you see these products stand in terms of pricing erosion once they come in market compared to the current portfolio which we have?
So some of the products that we will launch in the future may see limited competition, and these are the products that some of them we indicated during our investor day. Some are in our pipeline and we did not disclose. In general, like I said before, if there are multi ANDAs approved for a product, we will see similar phenomena of price erosion also for the injectables as well. I don't think that there will be significant difference in the behavior or the pattern of the procurement of the hospitals versus the retail in that respect.
Sure. And my last question is, can you comment on the trends which you are observing in the commodity prices or logistic costs, etc.? Has there been any change compared to what we saw in the previous quarter? Like any sign of moderation there?
No signs of moderation, but no sign of worsening. We see some of the commodity price still impacting, especially those that have inventory attached to it, as well as shipping costs. Naturally, as normally there is some time that it takes while the oil and some other commodity prices go down, and then of course accordingly normally in a certain period of time, from weeks to months, we start to see the impact also on our results. And of course, the real impact we can capture only we sell these products. So likely that any change that will happen to this market, we will see only, in our case, 6 months from now. Also.
Sure. Thank you for your answers. I'll get back in the queue.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks. Good evening, and thanks for the opportunity. Question is on gross margins. So I heard Mr. Parag saying about 150 bps on the ruble, largely due to ruble. But correct me if I'm wrong that rupee dollar also had a substantial movement. And you also said that there was a high base last quarter on the present, so that is also come down a bit. So are these not also factors which led to some decline in the gross margins?
So overall, the forex impact I told you was in aggregate. The US dollar rupee impact isn't significant. The headline, the important headline is that if you take out the positives and the negatives, both which are non-recurring, then our gross margins are in the normal range. If you look at our last several quarters, our gross margins fluctuate between 51 to 53, 54%. And the point I'm making is that our reported gross margin is 49.9, which has benefited from divestment of brands in India. But there are a number of other one-offs which are non-recurring in nature. And if you adjust these as well, in aggregate, our base gross margin is in the normal range. So that's the headline that I want you to understand.
And I want to add to that, we do not see a change in the pattern of our gross margins going forward as well. So like we discussed in previous calls, the nature of the game in which is impacted from Forex, from inventory, from price erosion, etc., we will always be in the range of somewhere between the numbers that Parag just mentioned, and this will continue also in the future. So we can reiterate that this is the margins that we feel comfortable on the gross margin, and we reiterate also what we discussed in Investor Day about our commitment for the EBITDA margin as well. So what we see is a consistent, if you wish, performance that is related to that. Probably now we see it more on the lower part of the range, but within the range.
Okay. And trying to understand this, when we met in Mumbai, the Analysts Day, R&D Day you had, so we have talked about 25% EBITDA margin, and I understand this is ex-Revlimid, right? So are we on track for fiscal 23-24 in that range? I mean, given that we had a blip in Q1?
So we are consistent with what we discussed in Mumbai. It was only a few weeks ago. What we said, I just want to make sure that it's the same. It's not necessarily a number that we'll achieve every quarter in the next many years. It will fluctuate. What we are saying is this is the number that on average we are going to get, which we feel comfortable with, which will allow us both to invest in the future and also to give the right return for the shareholders. So this is that indeed, in the case of very successful launch of lenalidomide, it could be higher than that. And after that, it can be lower than that. This will continue this kind of fluctuation. On average, we are consistent with what we discussed in Mumbai.
Okay. And I must also clarify that, just to clarify, the aspiration of 25% that we have stated is not including or excluding any particular product. It is the margin in aggregate for our business.
Mm-hmm. Okay, understood. Okay, and just a clarification on Revlimid is when you say launch, it includes the 2 exclusivity as well as the other strengths, right?
Correct.
Sorry, sir?
Yes.
Yes, that's right.
Correct.
Okay, perfect. So thank you and all the best.
Thank you. Our next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thank you for taking my question. Parag, again on the gross margin, if I look at, if I strip out the brand divestment in the quarter, we are closer to about the 57.5% margins. From your comments, it seems like the effects will normalize, but, there was also expectation that commodity prices wouldn't come off. So, what essentially will lead to normalization of this? Would it be Revlimid launch which will essentially help improve this margin? Or I'm just trying to understand what will move us from the existing margins to our normalized range that we're talking about.
Yeah, so now there will be 2-3 drivers. One is, I wouldn't single out Revlimid, first of all. I think I would say that the margins of the new product launches, including Revlimid, would be one significant driver of an uptake in the gross margin. The second would be, as I pointed out, There are brands like Sigmus, where we are sourcing them externally, and we are working towards internal sourcing. And Sigmus is one example I've given you. As part of our productivity initiative, we constantly work on in-housing brands which will lead to an improvement in our cost base. So that is going to be clearly a second lever, which is part of a larger productivity lever. There are a series of cost improvement programs that we are driving, looking for alternate vendors, improving plant yields. If you remember on the Investor Day, Sanjay presented our productivity status for each of the three businesses, which is OSDs, API, and sterile, and where we were a few years back, where we are now, and the further headroom that we have in productivity. That's going to be the second significant lever that gives us the confidence that we will maintain our gross margins in the normal range.
And the other is that the EM, India and Russia, because of the normalization that you said, we are going to have more visibility to growth as we discussed on this. Some of them were one-off and some normalizations, as well as the API that is growing as well. So just to make sure, we are very confident, even without Revlimid, the gross margin will be there.
That's very helpful, sir. And second, on the PSAI business, I understand the base impact, in the previous year because of COVID. But if I were to look at it quarter on quarter also, there's been moderation. So are we seeing, some amount of customer destocking or, customer inventory being high, which is limiting our ability to scale up that business? And also on the PSI business, are we able to pass on the cost pressures that we are seeing in the PSI business to our customers? Because margins there seem to have deteriorated too.
First, after a few quarters in which we saw the decline of the API, which is one component of the PCI, this quarter we see that we are coming back to growth. It's a very single-digit growth, but we are growing, and we believe that this will continue, and we do see the pickup. And this is primarily being driven by new products and new customers in territories. The second piece that is growing for us is the activities that we are capturing under PCI. We call it API Plus, in which we are selling dosage forms in countries in which we do not have direct access. So we do see a pickup in this business very, very nicely, and it's actually very healthy growth. And the third part, which is also growing, although it's not yet contributing significantly, is the CDMO activity on the small molecules. The part that disappeared this quarter from the numbers is COVID, which was there last time, and this is why it took slightly decline. But overall, if you normalize it for it, it is a growing business now.
And on the margin, sir?
Sorry? The margins, the more the API will grow, accordingly the margins will go up because it's a very cost-based type of a business, and it very much depends on that, so the margins will go up.
Got it. Thank you so much, sir.
Thank you. Next question is from the line of Balaji Prasad from Barclays. Please go ahead.
Hi, thank you for taking my question. This is Michaela on for Balaji Prasad. Just wanted to circle back on generic Revlimid. I guess could you just provide any further color on expectations here, and also just any further color on key launches in the U.S. this year and next? Thank you.
So, like I mentioned, we are going to have a volume limited launch during September 2022, and we will have that kind of permission to do that between September 22 and January 31st of 2026. After that, it will be unlimited. And naturally, we are ready for that and looking forward for that to happen. As for the other launches, we will have 25 plus of other launches in the United States. And overall, very consistent of what we discussed during the discussion of the Investor Day. We are confident that we will continue to grow in the United States on the CAGR basis with what we call the time to time, in which we will have blips ups and blips down as it's related to the nature of the product when we will have them. So, for example, this quarter is a bit down. Next quarter, I believe, will be up. Overall, it's in the direction that we have discussed in the past.
Thank you.
Thank you. Next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thank you so much, and good evening, everyone. But I just wanted to make sure on your comment on EBITDA margins for Q1. You did say that if you exclude one-offs, then even EBITDA margin was in the range of what you normally do, which I presume is 23-24%.
Yeah, so to clarify, our reported EBITDA margin, Sameer, is 34%. If you take out the impact of Suboxone settlement and the brand divestment, then it's around 20%. And then I spelled out a few non-recurring impacts, adverse impacts, for example, the COVID sales in the base and the gross margin. If you adjust for that, our EBITDA is in the normal range of 21 to 25%. If you look at the last several quarters, our EBITDA margin typically fluctuates in this range. So that's what I mean by the normal range.
Okay, yeah, Parag, that's very clear. And the second question is for the sale of brand, what you have recorded 230 crores through revenue line items. What's the cost against that? And I guess I'm just trying to say that what's the EBITDA impact of this number?
The total amount, Sameer, it's the total proceeds of the divestment, and therefore the entire amount falls to EBITDA.
Okay. Okay, got it. Yeah. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Thank you for this opportunity. The first question is on the, let's say, the revenue.
Your voice is not very clear. Request you to use the handset.
Yeah. Okay. Is it fine, sir?
Yes.
So the first question was on the Revlimid. So you mentioned about the likely launch of the product starting September. Just wanted to have a sense, what should be the competitive intensity here? And more importantly, what I was trying to understand is the limited volume condition. How rigid is that condition under settlement? Because even the Teva's launch is also under low single or mid single digit kind of a volume condition only they would have launched. But the prescription trend indicates that they are having double digit kind of percentage volume currently. So that is why just trying to understand how rigid is the limited volume condition for the settlement place.
It is rigid in the case that we can sell exactly the amount stated in the agreement, and the volumes and the market share that we can read is confidential, like I mentioned, so I cannot discuss that. Naturally, it's a very significant launch for us. As for the intensity of the competition, of course, depends how many players will be there and what will be their volumes that they can supply into the market at that point of time. That's yet to be seen. We will have to wait and see. We believe that it should be a very good launch for us.
Okay, because my point was also this: if the volume limit condition is also not rigid, then there could be a kind of a larger competition, and hence the price erosion could be larger. So that is the ultimate point that I was trying to understand here.
No, I understand the question. Unfortunately, I cannot share the details of the outcome.
Fine. So second question is on the on the therapeutic revenue mix, what we have said in the 20th filing. So last year, obviously, the global generic revenue growth, if we consider, it is around 16% kind of a growth that we have seen. But the large part of the growth has come from the anti-infective as a segment. So there was a kind of a 74% kind of jump in the segment. Whereas the other segment remain either single digit or muted or low double digit kind of trend. So whether that is a concern area for the growth of the current year, if we ignore the Revlimid contribution for the time being, then whether that can have a kind of a moderated trend for the current year in general for branded business, let's say India, Russia, emerging market like that.
I do not see a concern.
Okay. So that's not a concern. And
I do not see a concern.
Sure. Just last question, sir. In fact, the origin licensing arrangement what you had with Olema of US, so whether that $8 million upfront receipt that has been booked in this quarter?
No, it has not been booked. It is to be amortized over the contract period, which is over 4 years.
But that is okay. Even the upfront amount is also be amortized over the period.
That's right.
Okay. Yeah. Thank you. Thanks a lot.
Thank you. The next question is from the line of Tarang Agarwal from Old Bridge Capital. Please go ahead.
Hello, sir. Good evening. Just one question, sir. On the M&A strategy, I mean, what we've observed is you've recycled some of your brands in India. You've got Sigmus on one side, and you've also bought a small injectables for a couple of products. So just wanted to get a sense on why, what is the kind of advantage you get by getting rid of those smaller brands in India? Does it release a decent amount of, sales force, which can then be devoted into some other divisions? And the thought process behind buying the small injectables piece that you have?
Yeah, so thank you for the question. The divestment in India, we have a clear strategy in which segment we want to focus on and which segment we don't, and which brands we want to focus on and which brands we don't. So what you're going to see in India, and on top of it, you can get very nice value for the brands that are not in the focus, which we like to monetize it. We feel that it's a better alternative for the capital allocation of the company and also for the performance of the company. So likely what we are going to see in India, in which we will sell brands that are not in focus, and we will actually even buy brands like we did this quarter with Sigmus and the Novartis deals. So you're going to see both, and this will allow us to establish ourselves when we also add both the Horizon 1 and Horizon 2 activities in India to bring us to the aspiration of the number 5. In the case of the United States, we are always trying to find those low competition assets, especially if they are injectables, in order to create a better portfolio for the United States and for the customer United States. And if we do not have the means or we did not develop it in the past, we are getting it from others. That's, by the way, what we did at the time with Suboxone. That's what we did with Acosapant. So it's something that we are doing for many years and we'll continue to do so. So our pipeline in the US will continue to be products that we develop ourselves as well as licensing and products that we acquire.
Okay. And just to follow up on the India piece, sir, does it release some kind of, MR bandwidth to focus on some other brands, and the kind of maybe, gross profit or EBITDA that you might have lost by virtue of letting go of these brands?
So absolutely, it is helping us to focus our resources on the brands that we believe. This is part of what focus means. In terms of growth, we believe that on the long term it will help us to grow. And naturally, quarter on quarter, we may need to adjust for those sales that will be missing, and we will have to be cognizant of that. But on the years basis, we will go faster actually by focusing on the area that we believe that we have better competitive advantage.
Okay, and the loss in EBITDA or gross profit by virtue of divesting these brands?
You're not losing, you're actually gaining, because if you take the EBITDA that this product would have made versus the price that you got for it, it's a better deal for the company.
Okay. Thank you. Thank you, sir.
Thank you. Our next question is on the line of Kunal Dhamesha from Macquarie. Please go ahead.
Good evening. Just one question. Again on Reddy. So the volume percentage that is allowed for Reddy product, is it going to be calculated on annual basis or calendar year basis?
So I
Kunal, your voice is not clear. Can you
repeat, Kunal?
Yeah, I repeat. So in terms of volume percentage allowed for us for Reddy, is it calculated on annual basis or calendar year basis?
All these details are confidential at this stage.
Okay, thanks. I just have one question.
Thank you. The next question is from the line of Bino Pathirampil from InCred Capital. Please go ahead.
Hi. First, just a clarification. So this 230 crores of brand sales that you generated, that is part of this 1,300 crores of India revenue that you have reported, right? Correct?
Yes, that's right.
Okay. Second, in the US, you mentioned about incremental competition in a couple of products. Did you see incremental entry of a new player in any of the key products, or is it that the existing players got more aggressive? So I'm asking this because you specifically said two products.
Yeah, in these two products, Apotex launched competition for both during Q1.
Okay. Do you mind naming them?
I said Apotex, the company Apotex.
Yeah. Do you mind naming the products?
I said Suboxone and Icosapent.
Okay. Got it. Okay, great. Thank you.
Thank you. The next question is from the line of Darshil Jhaveri from Crown Capital. Please go ahead.
Hello, good evening, sir, and thank you for the opportunity. So I just have one question, if I may. So the performance in this quarter, considering all the one-offs that we have, could we take this performance as a base and sustainable quarter run rate, or could you just give some color on that? That would be very helpful, sir.
Yeah, this is I like to use the word consistent. So it's very much consistent, one with the strategy and our investment, and consistent also with the performance. With the understanding that we are facing sometimes a situation in the market that sometimes will be in favor and sometimes not. But overall, all the stuff that we discussed, our growth, which will be in the US single digit, outside of the US double digit, the EBITDA and the ROC targets that we discussed in the past, we are all we are still there and very consistent with what we have discussed in the past.
So just a clarifying thing. So our revenue and margins will be along these lines only, right? So we would see considerably around the same range in this year, and maybe could you just give us some clarity on what would a normal otherwise look in FY24 or something, sir?
Again, we are not giving guidance, but I'm repeating what I said before. We said that we are continuing to grow on double digit outside of the U.S., single digit in the U.S., and we are aiming for about 25 on EBITDA and ROC. This is still there. This is still valid. We cannot guide per quarter or per specific year. This can be fluctuate, but we will be in the neighborhood of those numbers, sometimes up and sometimes down. But we very much believe that we are in this area. And not just that, we believe that it will even allow us to invest well into the future, so we can be consistent for many years like that.
Okay, thank you so much, sir. That answers my question, sir. Thank you so much.
Thank you. Our next question is on the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the follow-up. Just on the injectable business, what is the current size annually, and are we seeing, some supply challenges in terms of syringes, stoppers, etc.?
So, because about 16-17% of our business is from injectables.
And we do not see right now a challenge of supply.
Okay, because one of your, peer group has talked about in the recent call that there have been shortages in stoppers and syringes, especially for the U.S. market. That's why. Okay.
I don't recall that.
Okay, perfect. And secondly, on this endeavors, of you recognizing in this quarter, I understand the case was won some time back. So what triggers the recognition, particularly for this quarter?
Now, the litigation that we won in the past was on the IP case. If you recall, we were injuncted when we launched the product in June 2018, and we were denied to go to the market for 9 months. And the $72 million is a settlement of that period of time that we were denied from coming to the marketplace.
Yeah, so this was some quarters back when we won the case.
No, the case, I'm repeating, there are two separate issues. One is to win the IP case. It means that the court decide that we are in an infringement situation, and the other is to win the case that we believe that we should get money back because we were denied to go to the market during the injunction period. Yeah. So this is for the second part.
So this is the settlement that we have entered into in this quarter, and that's why we are accounted for now.
Okay, perfect. Perfect. Thank you. That's all from my side. Thank you so much.
Thank you. The next question is from the line of Madhav Marda from FIS International. Please go ahead.
Yeah, hi, good evening. I just had one quick question. So, the India brands which we have sold, what is the EV sales or EV EBITDA at which we have sold it? So the 230 crores that we have recognized?
So it was answered before.
It's a multiple. So there are different brands. They have been sold to different companies at different multiples, but the average multiple ranges between 3.5 to 4.
3.5. Got it.
Of sales, just to clarify. I am giving you the sales multiple. Yeah.
Okay, perfect. That's my only question. Thank you.
Yeah. Thank you.
Thank you. Ladies and gentlemen, due to paucity of time, that would be our last question for today. I now hand the conference over to Mr. Amit Agarwal for closing comments. Thank you, and over to you, sir.
Thank you all for joining us for today's earnings call. In case of any further queries, please get in touch with Investor Relations team. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Dr. Reddy's Laboratories Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines. Thank you.